Hi, my name is Chandra Prakash Padiyar. I manage Tata Large and Mid Cap Fund. The fund aims to have minimum 35% allocation to large caps at all times and minimum 35% to mid caps at all times. For the balance 30%, the fund manager can choose to have large cap, mid cap or small cap as per the direction of the market over the investment horizon. The fund follows an investment philosophy of growth at reasonable price. We look to invest in companies where earnings growth could be strong over the investment horizon. Typically, we look at 3 to 5 years as our investment horizon. In line with our investment philosophy, we follow a bottom-up stock picking approach. We buy a limited number of companies. The current allocation of the fund is broadly around 42% in large caps, 38% in mid caps, and around 19% in small caps. What we also seek to build in the portfolio is a mix of re-rating candidates and compounders. Over the last 18 months or so, we have been busy realigning our portfolio. Since December 2024, a meaningful portion of the fund has been repositioned. Today, close to half the portfolio sits in what we internally identify as re-rating candidates. These are companies where we believe the medium-term earnings potential may not be fully reflected in current valuations. During this period, we added positions in a few companies across healthcare, power, and financial services. We have booked profits in select names in capital goods, healthcare, and oil and gas based on our internal assessments. We have been early investors in some of these re-rating companies. Over the recent months, the changes we made have started to reflect positively. These outcomes may reflect a combination of earnings developments, valuation changes, and market conditions. On sectors, we continue to remain overweight on financial services, chemicals, construction materials, telecommunication, and FMCG. We are underweight on capital goods, metals and mining, information technology, and consumer services, where risk-reward is not favorable at present. The earnings trajectory of many of our portfolio companies could start reflecting from Q4, FY26, FY27, and FY28 full years, subject to prevailing market and economic conditions. Broader market valuations are currently in line with long-term averages, with expected earnings growth in mid-teens over the next 2 financial years. If crude oil prices continue to stay elevated, earnings growth could moderate. We believe the current earnings cycle remains at a relatively early stage. For investors with a medium to long-term view, you can explore how this fund could fit into your overall equity allocation. Thanks for watching. Stay invested.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.